Hello everyone, my name is Richard Perry. I'm the market analyst at Handset Markets, and this is my latest non-farm payrolls webinar for September. Very quickly, just making sure everyone can see my slides. I've got the chat box and the question box is open. I'm hoping everyone can see everything and hear everything that I'm saying. So let's get into this quickly. Very quickly, this is the disclaimer, and you need to read and understand that, as I'll be talking about live market information and hopefully getting into it. Right, obviously we're going to talk about payrolls this month. I think it could be a very interesting month because we're possibly close to a rate hike, so we need to bear that in mind when we get the data out. There's a lot that could happen, and I think it could be a month of high volatility because of the fact that the payrolls that we get this month could potentially even push us into a rate hike in the next sort of couple of weeks with the Fed meeting on the 21st of September. So I'm going to look at what the expectations are, what the drivers are, look at a few instruments and live market analysis. Going into this payrolls, the general market sentiment is sort of, it's sort of mixed, I suppose, in terms of what the market thinks of a September rate hike. In terms of the expectations of a September rate hike, they're pretty much around about 30-35%. Sort of took a bit of a dive yesterday on the back of the ISM data. However, the markets are still sort of possibly going to push towards a September rate hike if we get a strong payrolls report this month. Janet Yellen's sort of Jackson Hole speech put the prospect of a rate hike back on the agenda. I think sort of highlighted the continued solid performance of the labour market. No real surprise there, but she also said that the case for an increase in the Fed funds rate had strengthened in recent months, and that market took as to be slightly more hawkish, slightly more towards the sort of preparing the market for a potential rate hike. Now, I think that ultimately the Fed will not hike in September, despite the I think it would need to take a really significantly strong payrolls report this time out to have a rate hike in September. Basically, because I think that the Fed is still a little bit ambiguous. You're still hearing Vice Chair Stanley Fisher saying things like the market is labour market is approaching levels that the Fed would be looking for, rather than saying we're there now, we're ready to go. Just give us sort of the next meeting, and we'll do it, basically. And I think that the fact is that the Fed does not want to surprise the market. The market is still not factoring in a September rate hike, and I think that thank you, Konstantinos. And I think that it's not going to be this month, but we'll see. Now, in terms of the consensus numbers, we're looking at 180,000 on the jobs numbers, 0.2% month-on-month for average hourly earnings. Now, average hourly earnings are still very important, I think. Now, interestingly enough, 0.2%, which basically is the forecast every month, pretty much there or thereabouts, would be a year-on-year drop to 2.5%, according to my calculations, down from 2.7%. So, ideally, it would be stronger if you're going to get a strong payrolls report. And as I've sort of said here, down on the bottom box here, 0.4% on the month-on-month average hourly earnings would be a strong number, as opposed to the expectations of 0.2%. Unemployment at 4.9, down from 4.8, down from 4.9. Now, this is interesting because unemployment and participation rate are sort of two very interesting components of this employment situation report. And you'd say that you'd want to see the participation rate rising, but equally, would the unemployment rate be drastically lower? Does that not suggest also that there's slack in the labour market? Potentially. Still, I mean, very dovish FOMC former member, Koch Lakota, was talking about the fact that when you get payrolls reports still above, generating numbers above 200,000, is that actually suggesting that there is still slack in the labour market? Would you not want to see consistently between sort of 160, 180 and stabilising labour market numbers, stabilising unemployment, increasing average hourly earnings. Yes, because again we're going to look back at the Phillips curve, but also stable labour market at low levels. So that would sort of suggest that if the participation rate is picking up again and the unemployment rate is falling, potentially there is slack in the labour market. So that's an interesting take on it as well. And also looking at revisions as well. Big down revisions for June, July would be a bit of a concern. Now, I've also heard or have been reading up about the fact that August is a notoriously odd month for payrolls reports. It is generally seen as the worst month of the year for job creation, or around about where the worst month is, and also is the month that has the most revisions to data. Now, let me just show you charts from CNBC. Here we see the mean job reports since the end of the financial crisis. What's that, 7 or so years ago? And we've seen August fairly low in terms of the mean month that we see, in line with July. But July was a massive month, so does that sort of detract from that data? Maybe. But also, look at the subsequent revisions, upward revisions, big upward revisions we've seen in the last few years in August, apart from 2015. And the average upward revision seems to be sort of 50-odd thousand jobs. So if we get a weak number today, perhaps that could be mitigated, and the market could see that that's sort of not actually going to be the end result that we get in a couple of months' time after the payrolls revisions. So get rid of that. So what could be the market in reaction? Now, a weak report, as I said, weak report, you'd be looking out for sort of 160,000 low average hourly earnings, such like that. Now, weak payrolls report would be dollar negative because it reduces the expectation of a rate hike. But I think, generally speaking, it would be the driver of safe haven trade. So you'd be looking at treasuries, yen and gold to perform very well in a weak payrolls report, especially this close to potentially a rate hike. I think you're going to get a lot of volatility on the dollar, and subsequently a lot of volatility on the yen as well. So subsequently in the forex markets, you'd be looking out for a weak dollar, strong yen, Aussie and Kiwi volatility. It's a difficult one with risk appetite. The closer you get to a rate hike, because you could argue that if the Fed isn't going to hike rates, and it's sort of a weak payrolls report would put off the Fed hiking interest rates, that would be risk positive. So you could get a lot of volatility on these risk trades, like the Aussie and the Kiwi. Euro and sterling, I think, certainly against or against the dollar on euro dollar and cable would be supported and rallying. But I think the main movers are going to be the dollar and the yen. In terms of commodities, gold strong, that would be a given. Oil volatile, again, because oil is another risk trade. So you might even see a rally on the fact that you get the weak dollar, because oil price has been running around with the dollar rally that we've seen in recent weeks. The oil price has been weakening as well. So that could mean that oil is running off the strength of the dollar at the moment, and subsequently oil could rally if we get a weak payrolls report. I mean, but as I said, the volatility could come in the fact that it is a risk trade. Now, in line, which I think after a couple of three really random and out of there payrolls reports in a row, we had that huge miss in the May numbers. June, July were incredibly strong. So the August payrolls data, well, is that going to continue along the theme? I think we're going to get pretty close to being in line, not a million miles off it. And as I said, the data that I've just sort of gone through, or the charts that I've gone through, would suggest that perhaps you're going to get a miss. So it'll be very interesting to see. Inline payrolls report, I think just generally volatility because of the uncertainty about what that would mean. The markets are sort of wishy-washy on a September rate hike. Ultimately, as I said, I don't think there's going to be a September rate hike, but a bit wishy-washy in terms of what we're looking at. Possibly dollar supported because it doesn't change a lot. An inline report. You've still got a fair amount of data before the FOMC meeting in September. But I still think that what you probably find is the this payrolls report needs to be another smash the lights out report to have a September rate hike. And as I said, I don't necessarily think that's going to be the case. So again, risk appetite would be mixed. I think there'll be a lot of spikes, a lot of retracements, and a volatility across the board. So volatile reaction generally to an inline report, as I said, because of the uncertainty as to exactly what it would mean. I don't think it would be one of these reports whereby you'd have the payrolls number in line and then no reaction or very limited reaction. I still think it would be a bit of a volatile reaction and on crosses generally. But as I said, if the dollar gets supported, then I think that would be weak for the yen. Because the dollar has been improving, generally speaking, in the last couple of weeks. So it'll be interesting to see if that continues. And if that is the case, then the yen would be weaker. Commodities, again, volatile due to uncertainty. And indices, generally, I think, supported and choppy. Now, strong payrolls report would be dollar strength. That's a given. Likely to be negative for risk appetite due to the potential for a rate hike. So you'd be a couple of months ago we had a very strong payrolls report, but the dollar ultimately sort of got sold off eventually because of the lack of, because of the market didn't believe there was going to be an imminent rate hike. However, if you get a strong payrolls report this time out, you could well get an imminent rate hike. Another from Konstantinos. Well, if non-farm payrolls is more and earnings are less, then it's just going to be an up and down session ending flat. Yeah, I think that's right. I think a mixed payrolls report would be volatility, but no real bit of a zero-sum gain in the event. So a strong payrolls report, definitely gold selling off. I think that's a given. And again, oil volatility. Right. One last thing before we go into it, mind the spike, because again we had this last month. This is not last month. This is actually the April payrolls report, where I've shown you here. But spikes, I think generally we're going to get a spiky report. I think, and that could well lead to some jumps and some retracements. So watch out for the numbers. It happened last month. You get the moves for maybe 10 or 5 to 10 minutes in one direction, then a retracement, and then, depending on the strength of the report, a move back in the direction. If you get a strong report, you'll get a pullback and then dollar strength. So your initial dollar strength move, a pullback, and then further dollar strength. An inline payrolls report, you're probably going to get some sort of V-shaped move, and the opposite in a weak payrolls report. So what is the overall payrolls report telling us? Right, so moving into the numbers, let's get some charts up here. What are we looking at? Right, let's get... that's interesting that the DAX has rallied in the last few minutes. Not significantly. Yeah, okay, right, so where's my data? Here's my data. So we're looking out for payrolls report, non-farm payrolls headline, unemployment, and average hourly earnings. Also labour force participation rate. So we've got this could be, as I said, a volatile reaction because of the market not really, certainly if the numbers are close to consensus, it could be a sort of a bit of a choppy move and not really showing any real sort of direction, but volatile. So what I'm going to do is I'm just going to sort of wait up now, and we'll see what happens. A few seconds away now. I will also be having to tweet this. Right, we're close, we're gone. Right, slightly lower. Again, a miss of 29 across the board. Slightly up on unemployment rate, interesting. Weak earnings. Okay, well that's generally a weak report, so we're seeing dollar weakness. Okay, so that's a weak report, so we're seeing dollar weakness. So I'll leave you with the charts just as I tweet about this. Yeah, yep, these jumping non-farm payrolls miss. that's a bit disappointing on the average hourly earnings, I have to say, and I think that is again pretty much rules out a September rate hike. Week of report rules out September hike, in my opinion. Anyway, I might be wrong. Right, let's look at this now. Right, so yeah, we are seeing euro dollar strength, obviously, 50 ticks up. Right, so we've seen that spike move up. Now, I think it's generally not a tremendously weak payrolls report, and as I said, CNBC were talking about the likelihood of a disappointing number being revised higher, and as I said, well, a disappointing number, 30,000 jobs or 29,000 jobs on the miss is a disappointing report. So you could well see a retracement, and that's what we're seeing now. That's what we're seeing. So we're seeing these initial moves retrace. Now, it'll be very interesting. I think this is going to be a volatile payrolls report. We could see sort of some spiky moves all over the place. I don't think you're going to get a major trend. You might see a major. You might see a sort of eventually sort of slightly dollar weak move, and that's generally what we're seeing. But I think we're going to see some retracements consistently through the coming minutes. So generally speaking, gold has sort of gapped higher to $8-10. There's resistance on gold at 13.25. Remember, you've got the Aussie coming higher, right? Sorry, question from Constantinos. So do we have the Aussie heading to 77, 78? Kiwi back to old territory of 75? Well, let's have a look very quickly at Aussie dollar on the daily chart. So yeah, I think generally speaking, Aussie coming back towards sort of that 76.50 maybe. It's sort of broken out through the initial resistance coming in around that sort of that old breakout level, or that old pivot line around 75, 75. So we could see further gains, but I think retracement moves are likely to be the case. So don't forget, watch the spike. Watch the spike. We've had minor moves to the upside, sort of 30, 40 ticks on euro dollar, 25 ticks on cable. Sorry, just doing these numbers in my head now. Oh no, that's not. Oh, sorry, dollar yen. Sorry, wrong chart. Sorry. Right, dollar yen. Yeah, falling away. Just 30 ticks, 40 ticks, something like that. But again, I think it will be. I think these moves could well retrace. I mean, we had an initial retracement of sort of 30 ticks already. Again, we are starting to see a bit of a retracement in these moves. As I said, I don't necessarily think this is going to be a payrolls report that sees a significant trend. We're not really seeing this trend coming through at all in the opening minutes. Slight trend on gold, sort of trying to push through that resistance at 13.25, interestingly enough. DAX, minor gains on equities. Again, those minor gains coming because the market is sort of looking to price out a September rate hike. I think, well, and if that is the case, then you're looking at sort of looser monetary policy, so subsequently the markets take that as a positive, or equity markets do anyway. So generally speaking, marginal dollar weakness. Not huge, and as I said, I think you could well see some little unwinding retracement moves that might give you another chance to get back in. I don't necessarily think you're going to see a retracement all the way back. You might do, but generally speaking, this should be a dollar weak move, dollar weakness in general. Nothing too significant though, and it doesn't look as though we're getting significant trending moves. So Aussie dollar breaking out above 75.75, as I said on this chart here, on this daily chart. 75.75 is a sort of a bit of a pivot line. Has been 75.80 area. So breaking through that 75.80 on Aussie dollar becomes a basis of support now. Breaking out becomes a basis of support. So we've seen a sort of minor Aussie dollar strength, but again, nothing too significant. The other question was on Kiwi. Yeah, looking to sort of move back towards those highs again, isn't it, on the Kiwi? Looking fairly solid. 73.80 is that reaction high that we saw last Friday. That was on Janet Yellen's speech. So that would be an interesting resistance. 73.80 on the Kiwi. But again, on the Kiwi, there is some big sort of overhead resistance of the uptrend channel. So let's get those charts back. Where are we looking? And yeah, you're sort of seeing drifting gains on euro dollar, on cable. Weakness on dollar yen. Nothing too significant. And as I said, I think you're probably going to see a bit of a retracement in a few minutes in these markets. Sort of it'd be interesting to see when they come through, if they come through. In terms of retracements, where would you be looking at? Well, for now, you'd say, okay, let's do a quick fib. You're looking at sort of 50% is 12.18, which is a bit of a support area, so that would be interesting. 61.8 as well is a bit of a fib level. 12.10, so 12.10 to 12.20, I'd say, on your euro dollar. Maybe as a retracement, we're starting to see a bit of a drift back lower. We've hit 12.50. We've already retraced sort of 20-25 ticks on that. Again, let's do one on cable. No, wrong one, Richard. Come on. Fib retracement. Bang. These are rough numbers, but again, you've already seen a 38.2% fib. 33.40 down to 33.20, so 20-25 ticks of retracement already. 33 figure area seems to be a fairly reasonable retracement zone initially. If that was the high, 33.40. 33.70 is your resistance on cable on the daily chart. So 33.70 is this reaction high that we saw from early August. Now, interesting that we've seen 33.40 area, not a million miles away from that 23.6% fib level. As I said, it'll be very interesting to see if that is broken. Okay, so 12.40 is a resistance point to consider on euro dollar, I'm presuming. 12.33, I mean, I've been saying is a pivot line on the daily. It's just backed away from 12.50. So yeah, 12.40, 12.30. I mean, 12.33 is this dotted red line, which was the lows this high, and also sort of reaction lows here. So around that 12.30, 12.40 level, yeah, on euro dollar is a resistance. So yeah, lots. Resistance overhead. Although you'd argue that this move is dollar weak, which it is. So it should ultimately sort of pull further strength in euro dollar. But as I said, that resistance comes in around those levels. So it's interesting that we've pulled back from that level and now starting to consolidate a bit on these charts. Sort of coming up to towards 10 minutes in. DAX has barely gone anywhere. Gold is pulling back slightly, so we saw sort of 5 or so minutes of move. We're starting to see a bit of consolidation now. Could that consolidation turn into a bit more of a corrective move on your dollar yen? Let's do fib retracement of that move again. Yeah, 38.2%. So it's basically pulled back to 38.2% on all these charts, isn't it? Euro dollar, cable, dollar yen. We've seen a 38.2% fib retracement, and we're starting to consolidate. So it'll be interesting to see if you get more of a pullback, because 38.2% would be a bullish pullback. 50% is sort of less so, but less bullish. So it'll be interesting to see. Yeah, it'd be interesting to see if we sort of pull back. So up towards 103.15 would be 50% on dollar yen. Interesting that cable's starting to go. Euro dollar hasn't started to. Cable's starting to pull higher again. Euro dollar not so much. Dollar yen is actually retracing. So this is sort of slightly more risk positive, this move. Yes, we're starting to see more of a retracement on dollar yen. That is a risk positive move, although we are seeing the DAX pulling lower. Risk positive would be should be gold negative, but it's starting to pull a bit higher. But this dollar yen, yeah, coming back towards 103.15. So, and again, more of a retracement on euro dollar. Bit of that consolidation is holding so far on cable, so that's sort of generally more risk positive. More of a retracement on that dollar yen move. So where would you be starting to look for possible buys again? Well, it's interesting because the lack of sort of decisiveness from this payrolls report. I would say just be a little bit careful with buying. Again, because it could actually ultimately drive a full retracement because it's a bit of a sort of a middle of the road payrolls number. If ultimately the sort of number gets revised higher, that would be sort of generally fairly neutral. But that average hourly earnings number, as I said, I think was a bit of a disappointment, certainly. Average hourly earnings coming in at 0.1 below the estimates, and actually pulls average hourly earnings back towards sort of 2.4%, down from 2.7. So that is, yeah. I mean, Rajesh, I expect the day to close almost flat. I think maybe. I don't expect to see too much of a trend out of this. You're not really seeing too much. Cable is sort of pulling higher again, generally because sterling has been stronger since yesterday with that manufacturing PMI dichotomy that you saw with the positive UK one and the negative US one. Dollar is still sort of retracing a little bit on that dollar yen move, so that's interesting. So yeah, this is a generally speaking a pretty sort of non-event. Cable is breaking out now, so cable is going. So cable is stronger, sterling strength, but you're seeing generally markets not really doing a great deal. Yeah, starting to see a bit of euro strength as well. Dollar sort of holding on, but yeah, generally speaking, markets are fairly settled. I mean, that gold chart, for example, fairly settled around that resistance of 13.25. Aussie dollar, yeah, lost the impetus in a rally. So yeah, I think cable might be a bit of a winner in this one, from the looks of it. Euro dollar and dollar yen not really doing a great deal, just sort of settling around, and also Aussie dollar not really doing a great deal. So these markets are not really gaining too much direction off this payrolls report. Yeah, minor sterling positivity. Again, the DAX, not really a great deal of direction. Gold basically flat. Since the initial move, gold's basically been flat around that 13.25 area, which is a resistance. Aussie just sort of straining at that breakout level, 75.80. Just again, well, in fact, it's even pulling back now. So yeah, I think Rajesh's comment, the fact that could close the day about flat, might not be too far off, to be honest. Euro dollar again, last 5 or so minutes, not really done much. Dollar yen starting to retrace, interesting. So that is general yen weakness, which is interesting considering the payrolls report was sort of slightly weaker. So that would a weaker payrolls report would generally see yen strength, but we're starting to see the dollar pulling back against the yen again. So yeah, I'm going to go with Rajesh. I think it's going to be sort of fairly nondescript in terms of ultimate direction on this move. So payrolls report bit wishy-washy really. Nothing too significant. Slightly disappointing on the average hourly earnings, and I think that rules out September rate hike. Doesn't really change a great deal. Expectations of a rate hike probably unchanged to maybe slightly lower on the September certainly, but December doesn't change a great deal. I still think they'll move in December, for example. Right, so well done. Thank you very much for listening, everyone, today. It's been fairly dull, really, isn't it? But I think next month could be another interesting one. So tune in again for next month. And with that in mind, I'll leave you with the disclaimer, if I can get it back. And also a chat about the research that I do on Handtech Markets. Go to our website and click on research for my stuff. Follow me on Twitter, Handtech Rich, LinkedIn Trader Group, Forex Traders Talk. And yes, I look forward to the next webinar. So with that, I'll leave you with the disclaimer, and I wish you good luck in all your trading on non-farm payrolls. And I will speak to you again next time. Thank you very much.